Welcome back to Smart Stock Sam, the channel where we break down the stocks that matter before the moment that matters. Today, we're diving deep into everything you need to know about Rezolve AI, ticker RZLV, right before its earnings release. We're talking infrastructure, partnerships, financials, the risks, the full picture. Because if you're holding this stock or even thinking about it, the next few days could change everything. So, let me ask you something. What if a company the market practically left for dead in 2024 is now positioning itself to become the AWS of a $30 trillion industry? That's not a typo. $30 trillion. We're talking about Rezolve AI, a stock that's been through the grinder, nearly written off after its post-SPAC phase that management themselves described as, quote, horrific. But right now, as we sit here in March 2026, we are days away from what I'm calling Judgment Day, a full-year earnings release that could either confirm one of the most aggressive corporate turnarounds in recent tech history or serve as the final wake-up call for every retail investor still holding on. Either way, you need to know what's inside this story before that number drops. Let's start with the big idea, because Rezolve isn't trying to grow incrementally. They are attempting a binary leap. Most companies inch forward. Rezolve is trying to jump off a cliff and build the wings on the way down. Their stated goal isn't to be another AI app on your phone. It's to become the foundational utility layer for global commerce. Think about that word, utility. They don't want to be the store. They want to be the electricity that runs the store. And the question the market is about to answer on March 30th, 2026 is brutally simple. Did they pull it off, or did they fly too close to the sun? Now, here's where the numbers get absolutely wild. At the start of 2025, Rezolve had 63 employees, 0 accounts, and 0 revenue. A complete standing start. By the end of that same year, they had scaled to over 1,000 employees and more than 950 accounts. In 12 months, 0 to 950. They are now guiding for $350 million in revenue for 2026 with a $500 million exit annual recurring revenue target. Could any company realistically scale from nothing to $500 million in ARR in under 2 years? That's the question you have to sit with, because the answer decides everything. To understand why they believe this is possible, you have to understand the market they're betting on. Right now, in what we call legacy commerce, you are the agent. You open a browser, you visit Nike, you check Adidas, maybe you pop over to a third site, and then you make a decision. But we are moving fast into a world of agentic commerce, where autonomous AI systems do the shopping for you. Here's the catch. When a human shops, they visit maybe 3 sites. When an AI agent shops, it interrogates 300 to 500 sites simultaneously, scanning for the best deal in real time. That's not a modest uptick in internet traffic. That is a 100 times scaling burden on infrastructure that was built for a completely different era. The pipes we've been using for 30 years were simply not designed for this. So who builds the new pipes? That's where Rezolve's big play comes in. They are quite literally running the AWS playbook. Just as Amazon built cloud infrastructure to handle its own scale and then sold that capacity to the world, Rezolve is building what they're calling a Web3 cloud, a proprietary distributed architecture designed to handle the crushing traffic demands of AI-driven commerce. They don't want to be one of the retailers on the platform. They want to own the platform itself, the rails, the infrastructure. And if that sounds familiar, it's because it is. It's the exact same logic that turned Amazon Web Services into one of the most profitable businesses in human history. Now let's get into the actual technology, because this is where things get interesting. The tech stack has 3 core layers. At the foundation, there is a distributed blockchain architecture. And before you roll your eyes, this is not about crypto speculation. This is about resilience. A decentralized database can handle massive agentic workloads and prevent the kind of cascading failures you'd see with a centralized system during a regional outage. On top of that sits BrainPower TM, their proprietary large language model. This isn't something they built in 6 months to chase a trend. It's backed by 10 years of research and development and is purpose-built for commerce context. And at the top of the stack, you have Brain Commerce and Checkout, the interface layer that enables real-time AI-driven transactions sitting directly on top of existing e-commerce systems. It's a full-stack solution. The AI becomes both buyer and seller. But here's the real credibility moment, and this is the part that changes the conversation. Rezolve has secured a strategic alliance with Microsoft, and this is not a logo on a slide deal. This partnership is led by Vic Miles, a former Walmart executive who now runs Microsoft's Americas advisory business. And here's what Miles actually said that should stop you in your tracks. Microsoft tried to build a solution in this space themselves. Miles stated their own attempt was, quote, harder than it looks, and that they found their vision already realized in Rezolve's platform. Let me say that again. Microsoft tried, Microsoft struggled, and Microsoft chose to partner instead of compete. When one of the most resource-rich technology companies on the planet decides it's easier to ally with a $2 stock than to build the solution themselves, that is not a small signal. That Microsoft relationship is also the engine behind their go-to-market strategy. Traditional enterprise B2B sales are brutally slow. Long procurement cycles, heavy IT gatekeeping, months of negotiation. But Rezolve is using Vic Miles's advisory workflows to bypass those hurdles entirely, deploying directly into Tier 1 brands including DFS, Mintra, Rebag, and iBuyDirect. It's a land and expand strategy that starts with the biggest names from day one, not the smallest. Because when your reference customers are Tier 1, every subsequent conversation gets easier. Now let's talk money, because this is where we have to be honest about the mountain they're climbing. The path to $500 million in exit annual recurring revenue requires a critical catalyst beyond organic growth. And that catalyst is the $230 million all-cash acquisition of a company called Reward. This is not a bolt-on deal. The Reward acquisition is designed to create a multinational AI platform for banking and loyalty, and it's expected to contribute approximately $90 million in EBITDA to the combined entity. This acquisition is essentially the financial bridge between where Rezolve is today and where they need to be. It's not just technology they're buying. It's revenue, it's cash flow, and it's a platform to scale their AI into the financial services world. So how do we know if this is actually working before the earnings drop? We look at the leading indicators. Rezolve is already reporting a 20% uplift in search activity across its platform, and that is the sound of AI agents like ChatGPT and Perplexity actively interrogating merchant sites. That is agentic traffic becoming real. They're also moving deeper into the retail funnel through what they call assortment refinement, helping merchants reduce supply chain waste before it happens. And in a move that's either visionary or completely ahead of its time, they are actively working to transition payment rails through a relationship with Tether's stablecoin initiative, pushing zero-fee settlements that would completely eliminate merchant processing fees. They are trying to bypass legacy payment systems entirely. Is that bold? Absolutely. Is it crazy enough to work? That's exactly the kind of question that keeps you up at night before an earnings release. Which brings us to the valuation, and this is where the story gets genuinely strange. The stock is currently trading in the $2.50 to $2.72 range, but there is a community-supported bull case that puts fair value at $10. Now you might ask, why is there such an enormous gap? Because the historical baggage is real. This stock has declined 74% over 3 years. That's not a rounding error, but look at the price-to-book ratio. Rezolve is trading at 70.6 times book value. The software industry average, 2.6. That means the market is pricing Rezolve at approximately 27 times the sector norm. This stock is not being valued on its current accounting. It is being priced on pure speculative premium for the agentic future, and that is either an opportunity of a lifetime or a warning sign written in neon. Want to know what the board thinks? Look at the warrants. Directors Anthony Sharp and Stephen Perry hold a combined stake of over 2.8 million shares, and both hold warrants with an exercise price of $8 that expire in January 2027. If the stock stays at $2, those warrants expire worthless. The board is structurally, financially, personally incentivized to drive this share price toward that $10 level. They are not just managers. They are betting their own compensation on the recovery. But we have to be honest about the risks, because this is not a sure thing by any stretch of the imagination. Execution risk is high. Agentic traffic spiking is not the same as high-margin revenue arriving on schedule. Enterprise implementation for Tier 1 brands is expensive and often requires significant human support, which puts pressure on margins. There is also a $200 million shelf registration hanging over the stock, which could mean significant dilution if they need additional capital. And finally, the security question that nobody has fully answered yet: will major banks and financial institutions actually trust a Web3 cloud with sensitive transactional data? That is a leap of faith that Rezolve is asking the entire industry to take. Before we close, I want to be clear about something important. Nothing in this video is financial advice. I am not a licensed financial advisor. Everything discussed here is for informational and educational purposes only. Rezolve AI is a highly speculative stock with significant volatility risk, and any investment decision you make should be based on your own research, your own risk tolerance, and ideally a conversation with a qualified financial professional. Past performance, in either direction, does not guarantee future results. Please invest responsibly. So here we are, March 30th, 2026, Judgment Day. The earnings release is the definitive test of the $500 million exit ARR thesis. Rezolve AI is standing at a true binary junction. Either they prove they are the AWS of commerce, converting 2025's explosive operational ramp into structural market dominance, or they become another cautionary tale of post-SPAC overextension, where the gap between AI ambition and enterprise reality proved too wide to bridge. The tech is validated by Microsoft. The financial runway is being built by the Reward acquisition, but the valuation is completely detached from anything resembling sector norms. You are either betting on a revolution or you're watching one unravel. There is no comfortable middle ground here. Watch the open on the 30th, and if you want to stay ahead of exactly this kind of move, the binary moments, the inflection points, the stocks the market hasn't fully figured out yet, hit subscribe on Smart Stock Sam. That's what we do here. See you on the other side of earnings.